5, 4, 3, 2, 1.
Hello and Assalamualaikum to Madam Unku Munirah binti Unku Abdul Aziz. My name is MAISARAH binti AZMAN HISHAM. My group consisted of 5 people, namely NURHANISAH, PUTRI LAILA, Siti Athyrah, and 1 SYAMIMI. We will present about the function and benefits of insurance. I will start with the function of insurance. The function of insurance are divided into 3 types, which are primary function, secondary function, and indirect functions. The primary function of insurance is to act as a risk transfer mechanism. Risk transfer can be defined as a mechanism of risk management that involves the transfer of future risks from one person to another. And one of the most common examples of risk management is purchasing insurance, where the risk of an individual or a company is transferred to a third party such as insurance company. Next, the advantages of risk transfer. Safeguard against future contingencies. It shields an individual or an organization against unforeseen financial risks that could be in the form of damage, theft, and losses. A policyholder or an indemnity can always be assured that the contingency lying ahead in the future will be borne by the insurance provider. Next, the disadvantage of risk transfer. Time-consuming. Time-consuming is another drawback. Purchasing an insurance policy might take a lot of time, and so does the claiming of the insurance. This could be tiresome and one of the discouraging factors of availing risk transfer. There are 9 functions under the secondary function. Firstly, release fund, otherwise tied up in reserve. Insurance substitute a certain premium payment in place of an uncertain loss payment. No prudent businessman will invest large sum of money without suitable safeguard. In the absence of insurance, large reserve fund will be necessary. Insurance has the effect of releasing this reserve for further investment and developments.
The other function of insurance is to stimulate business enterprise. Insurance risk transfer mechanism enabled and aided in the maintenance of today's large-scale industrial and commercial organizations. Such large-scale enterprises could not have begun without transferring most of their risk to insurers. Insurance also stimulates business by facilitating international trade, and it allows businesses to reduce risk by protecting them from bankruptcy and instability. Furthermore, insurance encourages businesses by allowing it to run smoothly and remain unaffected when there is a business interruption and consequential losses. Next, insurance also reduces fear and worry. Individuals and businesses can benefit from insurance because it mitigates the fear and worry associated with losses. It is possible to enjoy peace of mind by transferring the risk to an insurer. When something bad or an accident occurs unexpectedly, the insured should not be concerned about the cost. For example, if a fire interrupts a business operations and results in a loss of profits, insurance can then compensate the person who has suffered such a loss. Another example is when a person undergoes kidney surgery, the insurer may cover the medical costs.
The next function of insurance is to reduce losses. When the insured buy an insurance policy, usually the insurance company will provide guidelines for them on how to reduce loss. Individual and business people are advised to use appropriate device to avoid unfavorable risk outcome. For example, the insurance company will advise the insured to install an automatic fire sprinkler system in their company. Reduction of losses result in the lower amount to the insured, and this will encourage more saving which assists in reducing the premium. Reduce premium rate, encourage more business and provide better protection to the insured. As a result, insurance company provide financial support to health organization, fire department, educational institution and other organizations that work to minimize mass death and property damage. Moreover, the function of insurance is to encourage saving. Insurance does not only protect against risk and uncertainty, but it also encourages saving. Insurance is a compulsory way of saving that prevents insured from spending excessive fee. For instance, life insurance. Due to the regular payment of premium, life insurance increase people saving and provide an investment opportunity. Insurance encourage people to save money systematically since regular premiums are required to be compulsorily paid. As the result, if there is no loss after the contract has reached the maturity, the insured will receive lump sum payment of the premium paid. Besides, insurance promotes saving by lowering long-term costs, so the insured can save money by reducing out-of-pocket expenses for things like medical bill, lost property, and accident. Thus, this is a kind of saving for the insured.
Hello, I'm PUTRI LAILA. So for offer social benefits, insurance does not eliminate the risk of an insured loss or damage. However, it offers social security to people through a number of social protection policies. It not only provides protection in the event of death, but also assists insured in the event of sickness, maternity, old age, and other events. For instance, in the absence of a breadwinner in the family, there is little that the government or other social agencies can do to look after the welfare of those left behind. Thus, in order to ensure that a family continues to enjoy the same financial status as before, insurance is probably the best social security tool that can help in case of unforeseen eventualities. So for the first indirect functions is investment of funds. An investment fund is a supply of capital belonging to numerous investors used to collectively purchase securities, while each investor retains ownership and control of his own shares. An investment fund provides a broader selection of investment opportunities, greater management expertise, and lower investment fees than investors might be able to obtain on their own. So the types of investment funds include mutual funds, exchange traded fund, money market funds, and hedge funds. With investment funds, individual investors do not make decisions about how funds assets should be invested. They simply choose a fund based on its goals, risk, fees, and other factors.
Okay, next is invisible export. Insurance promote invisible export, such as providing insurance coverage to other countries, also known as a service whereby no tangible good is being exchanged. Insurance can be commercialized as necessary service by providing protection and ease of mind toward the insured party. This kind of service is improving day by day to provide more benefit to the people while gaining profit, thus affecting economics positively. The last indirect function is source of employment. As a new kind of job emerge, it provide opportunities to people in terms of employment. Same goes to insurance, in which it provides the benefit of income to society. Same people who work in insurance companies can market their product in many ways, such as using social media and using less traditional ways of promoting it through direct selling in new norms.
Let's move on to the benefits of insurance. There are 5 benefits of insurance. Firstly, insurance gives peace of mind. Buying insurance is important as it ensures that you are financially secure to face any type of problem in life. And this is why insurance is a very important part of financial planning. Having insurance offers you financial security and also peace of mind. No amount of money can replace your peace of mind. So, when you have insurance, you know that you are secure against any unforeseen event in life. And this gives you complete peace of mind. Furthermore, none of us can see the future or predetermine the future event. Any unforeseen tragedy can leave us physically, mentally, and financially strained. So, if you have insurance to take care of the outcome of such tragedies, such as illness, injury, and permanent disability, even death, you save yourself and your family from tension and stress. With insurance in place, any financial stress will be taken care of, and most importantly, your mind is at peace.
Next benefit of insurance is loss control. A surveyor is typically employed by insurers to provide loss control advice. Many insurers hire specialized surveyors for fire, security, liability, and other types of risk. When buyers of insurance meet the surveyor, they will usually deal with the loss control services provided by an insurer. The surveyor will determine the extent to which the insurance company is exposed to risk. For doing so, the surveyor will also provide advice, which could be in the form of pre-loss control, which is reducing the likelihood that something will happen, or post-loss control, which is reducing the likelihood that something will happen or after an event has occurred. The best time to consult a surveyor is during the planning stage of a project. The surveyor can then incorporate features to reduce and control loss. Installing automatic fire sprinkler systems is an example of loss control. However, if loss occurs, the loss adjuster will be responsible for the work. This is due to the fact that surveyor's work is typically performed at the beginning of the insurance. The loss adjuster will be from an independent loss adjuster firm. The investigation of losses, their causes, and values is frequently a highly technical and complex process that necessitates immediate action following a loss in order to accurately assess these factors and take steps to minimize further loss.
In addition, insurance gives social benefit. When the insured buy insurance, they are not only covered for their own loss, they are actually helping each other who have the same risk in covering the losses through the concept of common pool. Common pool is the concept of the group of individuals that have same risk and give contribution, which is known as premium. The collected premium will be used to help each other in covering the losses. For example, when we purchase the insurance policy, we might have a possibility to face no loss. However, through paying a premium, we can help the unlucky one in covering the loss that they face. They will have a fund available to recover from loss and to stimulate the business activity. Therefore, they can maintain their business and their source of income, which lead to the contribution of the national economy.
So, for the fourth benefit is the investment of funds. So, the business idea of an investment fund is to enable investors from all classes of society to participate in and benefit from the profits of productive capital as well as real estate. In a more general perspective, the investment fund philosophy is based on the principle of equal opportunities for all investors in all markets. To this end, investment funds pool money
through money for all pools money by selling shares to many investors and invest the proceeds in a portfolio of securities or income producing properties or even both. Investment funds can be classified between open-ended and closed-ended funds. So open-end investment funds, also referred to as mutual funds, but do not have a fixed number of outstanding units. Instead, the number of shares is changing as the funds continually stand ready to both sell new shares to all kinds of investors without limitations and to redeem old shares on demand from them. Closed-end funds trade more similarly to stocks than open-end funds. Closed-end funds are managed investment funds that issue a fixed number of shares and trade on an exchange. That's all from me. Thank you.
The last one is investable earning. What is investable earning? The earning from a book contribute to the balance of payment as a result of transaction involving service such as insurance, banking, shipping, and tourism, often known as investable, rather than the sale and purchase of goods. Investable part in a nation's current account, although they are often difficult to quantity. The common practice is showing only net figure for the visible item can thus be highly misleading as measure their quantitative importance. The visible normally less volatile from year to year than import and export goods, so do not reflect cyclical influence so great and extent unless the recession is extremely severe. So, as a conclusion, insurance is a large investment and you will most likely purchase multiple policies throughout your lifetime. It is essential that you know what each type of insurance covers and how it works so you can make the best decision about what to buy. Do not base your decision on just what is cheapest, but look at what it provides. Take the time to shop around and find the right insurance for your situation. People often say they cannot afford insurance, but the reality is that they cannot afford not to have it. It can save them from $1,000 or more in unplanned expenses when unexpected situations arise. You do not want to waste your money on policies that do not meet your needs. But the right insurance policy can protect you and your family from unforeseen disaster. That's all from us. Thank you.